My name is DJ Wright. I'm with Financial Freedom Wealth Management Group, and I'm here for your Financial Tip Tuesday. Thanks for joining us. And today's question: what are dividends? So you may see these deposits that happen into your account periodically, maybe monthly, maybe quarterly. It's actual cash coming into your account. So what are these things? Well, they're dividends, and they're the way companies share their profits with their investors. So remember, as you're an owner of a company, when you have that stock, you are in fact an owner, and the company can share its profits with you, right? They don't have to. It's up to the company. Of course, companies that do pay dividends are sometimes more attractive to investors. Means they're making money, which is a good thing. So some of your stocks may pay them, some of them may not. Generally speaking, more value type stocks are going to be paying dividends. Growth companies that are really focusing on growth and reinvesting in themselves, they may or may not make a profit yet. They likely are not paying a dividend. Again, they're trying to grow the business, but it's something to keep an eye on. And then even if you own mutual funds, so a mutual fund full of stocks, there's going to likely be dividends that are paid from that fund. So most recent stats on corporate dividends suggest that global companies are fairly bullish on the world's economic recovery. Dividends paid to investors are on track to hit 1.4 trillion this year and are expected to increase over the next 12 months. So companies are paying 1.4 trillion in dividends. That's pretty good. And new research found that 84% of companies in the second quarter of this year, 2021, either increased or maintained their dividend compared to last year. Now, take that with a grain of salt. When you look at quarter two from the year before, we were, in a recession. Uh, but that's still really good to know that almost all the companies out there are either maintaining or increasing these. What you don't want to see is a company take it away. That's likely a problem. Now, although the current environment looks positive, dividends can be stopped. So this is not a guarantee. The company does not have to pay a dividend. And again, they can pay it and then decide to take that back. Maybe they've come onto some financial troubles. It doesn't work for them to continue paying a dividend. And the board has the ability to decide what they're going to do with dividends. So it's not, the stockholders that would say, yes, we want dividends. The board would really own that end result there. So if you're looking, at companies and you want to find a good one that's paying a good dividend, something you could do is look at their cash position and see, do they have good cash flow? You can also look at the history of that company. Have they consistently paid a dividend, or have they had lapses in that before? So those are some things that you could look at. Of course, past performance can never guarantee future results. Now, if you are receiving dividends, what should you do with them? You have money that's just being deposited into your account. What should you do? Well, you could take that cash and you could spend it, take some income. Another option is to reinvest. And this is what I'd recommend for all of you. If you don't need that money, you can just reinvest in that same company. And now you're getting more shares than you had before, and you didn't have to put in any more money. So it's a really great benefit to you. And then, of course, if that company continues to grow, now you have more shares working for you. You can really increase your growth rate. So if you are curious about, what you own, if you're receiving any dividends, feel free to reach out and talk to us. We'd love to take a look at your portfolio and let you know if you're set up correctly. All right. Well, thank you all for joining me. I hope you have a great holiday week and a good end to the year. And we will see you next Tuesday. Thank you. Bye.